Now let's move on to some alternative definitions of OCF. New ways of calculating it, which I went to briefly on one of the earlier slides. Again, if there's no interest expense on your income statement, I can use any of these four methods. The traditional method is always OCF equals EBIT plus D minus T. That always works in all cases, but if you have no interest expense, I can take bottom-up approach, which is MPAT plus D. I can do top-down approach, which is sales minus cost minus taxes, or I can do tax yield approach, which is sales minus cost times 1 minus the tax rate plus depreciation times the tax rate, D times T. Here's a sample income statement, P&L. I can use the traditional approach where I would take OCF equals EBIT plus D minus T. It should result in the same exact answer as if you use the bottom-up approach, the top-down approach, or the tax yield approach. Again, I can use those three approaches on the right if and only if there's no interest expense on that income statement, and you see that income statement, you don't see a line calling for interest expense. So use any of those four methods, you should get the same answer. And you should check it with traditional approach, OCF equals EBIT plus D minus T, and you should still get $732, no matter which method you use. You might get a question on what is the amount of the depreciation tax yield. It's simply depreciation times the company's tax rate, D times T. So in this case, tax rate is 34%, and the depreciation is $600. So my depreciation tax yield, the amount that depreciation shields us, is 204. 600 times 0.34 gives us our depreciation tax yield.